return been on this solution? That's a really great question. So what we've seen so far, I can give you some rough numbers. I mentioned some of the accuracy on the churn model. We're certainly seeing it around or above 80% accuracy, so we can capture at least 80% of the policies that are at risk for churn. From a fraud standpoint, we're around 90% accurate. What does that mean in terms of the numbers? So what we've seen so far analyzing our client data on the churn side, that translates to, from a premium standpoint, like roughly $50 to $60 million. Loss amount was about around 30 to 35. So loss ratio on average around 55%. But in just revenue numbers, around 60 million for the predicted churn. For fraud, the claim amount has been around 10 million in claims, and that's across both the property loss as well as medical, etc. So significant money we're talking about in terms of being able to either recover money if claims have already been paid out, or implementing this proactively, potentially reducing costs, whether it's through fraud or through the customer attrition. But good question. There is actually a real return on implementing these models in production.